So you're thinking about buying a home, getting a mortgage, and maybe relocating or upsizing, downsizing. What are the top 10 things to avoid, the top 10 actions to avoid when applying for a mortgage? Hey, this is Paul Fidenis with the VIP Home Team here, coming to you with some great advice. If you're looking to buy a home, there are a number of things you want to avoid doing, but here's the top 10 action items to avoid when you're actually looking to buy a home. Number one is changing jobs, right? It's one thing if you change jobs and you're in the same industry, that might be okay for the most part. But there might be a waiting period. You might need to be able to get through that 90-day probationary period or something along that line. So changing jobs can definitely be an issue. If you're thinking of buying a home and you're also thinking about changing jobs, talk to your lender, okay? Explain the situation, and let's get an answer up front, because you may want to delay one or the other with sufficient time in order to get through those changes. Number two, and I've seen this a lot, is buying a vehicle. So many people get excited, right? They might have come into some money, they might have got a nice bonus at work or gotten a raise, and it's like, oh, let's go buy a house. And oh, you know what? I've been wanting to buy a car too. I want to upgrade from this old jalopy here, and I want to get me a nice Mercedes Benz. Well, don't do that, okay? Ride that jalopy out until you get into your home, and then go get your Mercedes Benz. Okay, number three, using credit cards excessively. All right, so the credit bureaus look at that, and if you keep it 10 to 20% of what your credit limit is, you're in the safe zone. Anything more than that, you start throwing up red flags and they start dinging you. And so you want to keep your purchases limited on your credit cards. Number four, spending money you've set aside for closing. Yes, this actually does happen. You might set aside 20 grand in the bank. It's like, this is my down payment for my home. Oh, but all of a sudden you need to pay something or need to buy something or whatever the case might be. And so you tap into that money, think, well, I'll just go ahead and put it back in there in the next couple months. And sometimes it doesn't happen. So avoid spending that money. Number five, making payments late. I know that sometimes, we just happen to miss it, right? We get busy, we got a bill sitting there and we just didn't get paid. It got lost in the shuffle maybe, and it ended up being a late payment, especially if it's a credit card or something like that. They report those pretty quick for being late. Don't make those payments late. Make sure that you stay on time with that and stay on top of it. Number six, making large purchases. Well, we already talked about a car, but hey, you're looking at buying a house, right? And you maybe have a down payment on a house, and then maybe it's being built. Maybe you buy a new construction and it's like 6 months out. It's like, hey, honey, let's go shopping. Let's start planning our new furniture, and we'll put it on layaway, or we'll start paying it off. And by the time we get in the house, they can deliver it, and we'll be good to go. Well, don't do that. Don't do that, because unless you've got the cash on hand and you're buying it with cash and you're not charging it and putting it on some sort of credit, you just want to avoid doing that. Number seven is initiating credit inquiries. Right now, it's okay. Like if you're shopping, you're looking for a home, right? And you might be shopping your mortgages. And it's not a bad idea to compare 2 or 3 different mortgage lenders to see what the rates are and what the incentives are and what kind of fees are involved, right? Well, just because you go to 3 and each one dings your credit report, it's not going to be 3 hard dings. It's just going to be 1 mortgage ding. And so it's not going to be that bad, but you don't want to initiate other dings. You don't want to initiate, let's go car shopping, right? Let's go see what we can afford there. Let's think about, let's plan a vacation, right? Sometimes we have to plan a vacation a year or 2 out in advance. And now we're going to go ahead and put this big deposit down or even prepay ahead of time in order to get some discount or some special deal. And now all of a sudden that's going to affect our credit. So number 8, making large deposits or changing bank accounts. Yeah, your bank accounts matter too, right? They want to look at your past deposits and withdrawals. They want your bank statements, and so making changes, during the process of buying a home could be detrimental. Maybe not too bad, but it's really important to have a paper trail for everything. So, like if somebody gifts you money, right? Your parents give you a gift of some cash to be able to use as a down payment for a home. Well, you got to show that paper trail, and sometimes that money needs to sit there and be in the bank. You got to show that was part of your savings for the last 6 months in some cases. So you want to make sure that you season that money that's in there. Number 9 is co-signing a loan for others. Yeah, you might get hit up. Hey, Mom, Dad, I'm buying this car, but I need a co-signer. Or maybe they're buying their first house and they're trying to qualify for a mortgage and they need a co-signer. And you're like, sure, I'll go ahead and co-sign your loan. I mean, I'd do it for my kids, right? And so you don't want to do that. If you're looking to buy a home for yourself, you don't want to do that. And number 10, scheduling unwisely. So you want to look at the scheduling of everything. If you're buying new construction, sometimes the scheduling can't be exact. And so you have to know that going in, that look, we're set to schedule 6 months from now. In one case, we have a contract where they're scheduling a year from now. And so that could end up being 11 months. It could be 13, 14, 15 months. We don't know, right? We don't know until we get closer. So you want to be able to look at that scheduling and make sure that you have a full understanding of the timeline and not be doing things in between now and then that might have a negative impact in your ability to finance. We're seeing that now, just with interest rates rising. People that went under contract 4, 5, 6 months ago, and they were maybe at 3.5% for a mortgage rate, and now they're at 5 or even higher in some cases. They can't qualify for the mortgage, so those homes are coming back on the market. So, hey, that's my top 10 action items to avoid when trying to get a mortgage for a home. And I'm Paul Fidenis with the VIP Home Team. We are here to help you. We love doing real estate. We love serving our buyers and our sellers. If you need anything at all that's real estate related, feel free to reach out anytime on my cell phone at 407-744-1681. All right, thanks. I'll see you on the next one.